Today on Trading Bulls Z, SPY gapped down, just as our heroes predicted that it would. But they swung some critical plays. How did that work in the midst of today's fall? We'll find out on this exciting episode of Trading Bulls Z. What is going on, Z Trader? Zeno Trader here, and today we are coming at you with your daily market recap. If you find value in what we do, consider subscribing for more content and market updates. And if you wouldn't mind destroying the like button for the YouTube algorithm, seriously, hit the like button. Follow us on Instagram and join us every day, Monday through Friday, during market hours. Our Discord server is where it's at. We have over $5,000 worth of learning materials, all for the wonderful price of, drum roll please, free $99. That's right, it's absolutely free to join. The link is posted, as always, in the description below. Be there or be square. And lastly, remember, this is not investment advice. This is for educational purposes only. Do not hop into anything discussed here without your own due diligence, as these are not trading signals, but rather my thoughts on specific securities. So, ladies and gentlemen, with that being said, let us get into it. All right, so the first thing we have got going on today, and we've been on a roll this week. I told you guys yesterday in the market recap video that SPY would likely gap down, and lo and behold, we have the day chart here, and it did. And I've also said that the day before yesterday that we'd likely chop around up and down, up and down, up and down, and that's what we've done all week. I didn't see SPY erasing all of her gains for the week. Even if we close down tomorrow, we still have significant gains unless we close below this level, and I don't see that because we did bounce up slightly. You probably can't see it, but there is a wick extending from this candle that hits the 200 MA exactly. So the 200 MA is now acting as a support for SPY. One of two things could happen. Either we're going to gap up, well, not gap up, but bounce up from here and keep going, or we're going to come crashing back down to earth. Like I told you guys, fundamentally, there's no reason to be up in this area at all. We have no business in this area on SPY yet at all. Okay, we should, and a lot of the pundits and professional financial analysts and people like Mohamed El-Arian and other prominent economists believe we will see a retracement of these lows. We don't know when, obviously, but most respected and prominent economists do expect that we should see some type of retracement to the downside. As to when that will happen, that's yet to be seen. We will probably need another negative catalyst to get the ball rolling on that, if I had to guess. But more than likely, look at all this time and these weeks that have gone by. We've gone nowhere. We've essentially traded in this range. SPY can go up, SPY can go down, but it's just basically stuck here in this range. So we'll see what happens. More than likely, we won't stay above the 200 MA for long. And as you can see, we're already coming back down. We're already oversold, so we're going to eventually have to come back down from being oversold on the daily chart. So if you take a look at, the weekly chart, obviously we're up. We're coming back down a little bit. Even if we close the week, somewhere down here, it doesn't matter because we've, made significant gains on the week. Daily chart, of course, we're down today, but traded sideways and closed. There's a lot of volume right there on this candle. We're oversold. though on the daily 5-minute chart. Let's take a look at the other charts. So we have SPY going on here, again chopping along this line all week long. I don't love the fact that we are stuck chopping on this line, but eventually something's going to happen. Either, this is a good picture of what's happening in the markets. The bears and bulls are duking it out and nobody's winning. The bears kind of got some, shed some blood here and here, but other than that, it's pretty much an even fight. So once we get this was actually supposed to be the reversal, but the bulls wouldn't allow it. So, once we get 2 hourly candles closing below this level, that technically should signal a reversal. We'll keep our eye on it and see how this actually ends up going. Let's take a look at the Dow. We were down only 100 points today, and that's curious considering that the unemployment numbers came back, showing that the trend is not easing. We're still seeing massive amounts of unemployment. Things are not necessarily turning around, but the market is optimistic because everything's opening up and trying to find some sort of stabilization. So we'll see what happens. I mean, in the coming weeks, we'll know a little bit more. But the Dow is up against a critical resistance level, which, to be honest, I don't think it'll break over this level. So, we'll see. It's also trading in the channel. Let's take a look at the VIX to see if we could try to find some perspective on where SPY may be headed in the short run. Okay, so we got a VIX pump right at the end, but it kind of died off there. So we seem to have some resistance around 35. It's coming down after being overbought. So, but it did turn green on the MACD on the daily chart. That's not good for SPY calls. Let's take a look at the daily charts. Not exactly going anywhere. Doji candle closed today. That doesn't inspire any sort of directional relief for anybody who's wondering. So nope, can't read the tea leaves because we have a doji. This can go either way tomorrow, and there's nothing on the MACD and there's nothing on the RSI. So your guess is just as good as mine. I suspect, though, taking all this into consideration, the unemployment numbers were not really counted in today's close. I mean, we were only off 100 points on the Dow and 200 points on SPY. So that's, it could go either way. But like I said, we've been bouncing all week. There's no need for me to change my thought process. There's no catalyst or any reason to. So unless something changes between now and tomorrow should be an up day. So marginally, not anything great. We may gap up and trade higher. I've been calling these all week long. So more than likely tomorrow we should be barely up, probably chop sideways before we choose a direction. So if you're looking to buy some calls and puts, let's take a look at how you would necessarily do that on our Active Trader Pro. So let's take a look at SPY here. Let's check out these levels. All right. So it appears that we are at a support level. What do you know? Interesting. But the problem is we are below VWAP and below the 50 MA. And that is a huge concern, especially given the fact that they have both converged on the hourly chart. This is serious. So tomorrow we may finally see when SPY chooses a direction, if it chooses a direction tomorrow. If we get a close underneath this green line, which looks to be about 294-ish, 293.4-ish, yeah, I'd start looking for some puts, uh, hourly closes below this line, because that means we're returning back to normal levels. We're not supposed to be up here. So, we'll probably hit, if that's the case, 292 and maybe bounce or continue depending on what economic news comes out. But, calls over 296.74 and puts, I'm just going to be ultra safe and go ahead and say 293. Be ultra conservative. So, yep. That is our analysis on SPY. Now, let us, that concludes our market analysis outlook. Without further ado, let us, wait a minute. We have to look at the economic data. So, let's see what we got coming out. So, of course, we had jobless claims come out today. We had initial jobless claims, continuing jobless claims, worse than expected, worse than expected, worse than expected. I mean, we did have some existing home sales. I mean, that's better than expected. There's a lot of pent up demand for this stuff, existing home sales. So a lot of so it's kind of mixed. Good data, bad data. Yeah. So, that's why the market didn't really have a huge reaction to anything. Tomorrow, let's see what we got coming out. Not really a lot of important stuff. And then Fridays, the volume's light. Yeah, so we're good for tomorrow. Nothing super important coming out tomorrow. British retail sales and stuff that affects other countries, Canadian retail sales. That'll be big. We'll see what the forecast and this. I knew I should have swung target and dang, sucks because these are probably going to come back better. And the retail segment's been getting beat down, so today would have been a perfect day to buy in. They're all at support levels, probably going to bounce tomorrow. Crap. You heard it here, folks. First here, folks. So, so that's it for the market outlook. So let us get into the plays. So we have been talking about a few stocks As it pertains to earnings, BJ's was one of them. I told you guys Monday that they were going to be my dark horse earnings winner. And what do you know? Look at that candle. I mean, is it on Viagra or what? That is just outrageous. And there was nothing particularly of note about BJ's at all. But I told you, and it's crazy because I got into play, made a little money, lost a little money, cut bait because they fell. I think I cut bait here, right? No diamond hands, no animanium hands, paper towel hands. This is what you get, folks, when you have paper towel hands. You could get with this or you could get with it. Look at that. If I would have just held for one more day. Jeez Louise. But you know what? That's okay. That's what I get. You live and you learn, right? All lessons learned. So the next thing we were looking at was Baba. They have earnings that are coming out, I believe, today. No, I'm sorry. They come out Friday. So they were up today, but then they came back down and fell, and then they bounced around and, kind of closed midpoint of this candle. I don't know. Maybe they'll do something before 2 something. I'm not sure. There's really no way to know. You could get I forget the name of it. Geez, I'm having a brain fart. A straddle on this, just so whichever way it goes, you see the losing position early and cut that one and let the winning position run. So yeah, that's Baba. We also talked about Take Two. That's been the savior, and it was today again. We'll get into that in a few. But yeah, Take Two took us to the promised land again today, even though on this chart it may not look like it fell off the cliff, but we got out before that, but then we got back into calls near the end of the day that we swung. We will see how that turns out tomorrow. Yeah, they kind of fell off a cliff today, so that was not sexy at all. And it's crazy because we got, calls down here and ran them all the way up and then got out like right here. Woo! Lucky we didn't stay in. Got back in calls down here, so we'll see um, what this does tomorrow. I like the fact that it's that volume right there. I don't love the fact that it's kind of oversold. I don't know how much I should give to this since it's aftermarket, but it did turn green on the MACD, so that's something. Um, we'll see. The other thing I was talking about was Intuit. They have earnings today, actually, after the close. So we'll see what happens. Ooh, wow, that is something. Jeez Louise, they're getting murdered after hours. What in the world? Oh gosh, hold on. I have to go to another chart to see exactly what is going on here. Like, that is just ridiculous. Hold on. Let's see what we got going on. One moment. Wow. Okay. So we broke through support and the 50 MA and the VWAP. So that's fun. Wow. Okay. So it looks like we're down at around 286. Sheesh. They must have missed big or gave terrible forward guidance. That is nuts. Wow. All right. Well, that seals their fate. Glad I didn't play this, but it's always nice to play that. But every action is an overreaction. I would keep my eye on this and see where it lands and then get in calls at the bottom, of course. That would be my suggestion for a play like this. Let's see, and last but not least, we have NVIDIA. They just beat earnings. Just came across the wire, but they're still trading down sideways-ish. So it'd be interesting to see what their forward guidance was and, basically how they formatted everything. But we're trading underneath everything. Let's see the daily chart. Yeah, off the cliff, of course, because you had all this run up to the earnings. So even if they beat, is really not much farther they can go. That's why I like quiet dark horse stuff before earnings, because it has a better chance to run, right? So, this is my first time playing earnings stuff. So even though we're calling this stuff, our timings and entries and everything's got to get better over time, and we'll get there. So it's coming down from being oversold, so there'll probably be a continuation to the downside maybe tomorrow, unless it hurries up and comes back up. But we'll see. So that concludes all of the plays for the day. Let me get into the P&L. So we got here some Apple. Everybody, shout out to the people in the chat who were talking about this. I didn't get in for the put side of it, but I did get in for the calls. I waited till it hit the bottom and then got in at the very bottom. Made my money and got out. Dollar General was a swing from yesterday. It missed. I was actually going to keep it for longer, but it was like going down, 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 down. I'm like, you know what? I'll just find a better entry. Just take this little loss and get out. Facebook, that was a huge mess up for me. That was a huge faux pas. What happened was I was actually trying to take advantage of the puts, but it went against me. Lost out bigly. Target was a swing that I got out of. Tomorrow, like I said, this stuff that I sold today will bounce tomorrow. Watch and see. It'll probably be up like $50, knowing my luck, but whatever. But lo and behold, Take Two once again came through with the drip to save the day yet again for the third day in a row to save the P&L. Shout out to Take Two Interactive. Couldn't stay away, swung some again. It's losing so far. We'll see where it opens up in the morning. If I get clapped, it doesn't even matter because I've made so much money on Take Two this week that this is just house money at this point. So that is the plays. Now, for the final segment, let's get to the questions. So we have the questions here, and shameless plug. Remember, it's free 99 to join our Discord server. We are live Monday through Fridays during market hours. The link will be in the description below. Let's get to it. So we have a question. Disney has gone to all-time highs of 153 before the crash. It was trading around high 140s. They submitted a plan to the state to reopen, If state approves the plan, the stock should skyrocket, maybe not necessarily to the high of 140s, but mid 130s. I'm looking at 150 calls for 17th of July at 33 cents a pop. Thinking about buying 5 and holding. Do you guys think this is a good bet considering Florida has eased its lockdown restrictions? So let's break down this question. So Florida has been easing its lockdown restrictions. That's true. Disney has a tentative plan in place to open back up pretty soon. Their stock did go up on the news. Disney is a company that I would not bet against long term. Let's take a look at their chart to see how we can potentially play this. I do like the long strike price of July, but they are coming up against a resistance of the 200 MA. So, and they've gone up significantly since their earnings release, but that was mostly due to the fact that Florida is easing restrictions and they are planning to preliminarily open coming up soon. They did get clapped a little bit today, down $2, but I really wouldn't worry about that. Let's take a look here. So they are trading in a channel. I am not a proponent of channel trading. I don't love it, but if this is a long-term hold, I suppose you could, because relatively shorter time frames won't matter to you as much. But we will just have to see. Let me see. Zoom out. Okay, so we're at a higher level. I don't know, man. This is kind of dangerous to me because if the retracement occur, well, we don't know when the retracement of the lows will occur, but I just don't love it being, trending at these levels above R2 like this. But I do agree that, if, things do turn out that the restrictions get lifted and they open up and everything goes well, they will definitely moon on positive news. So it is something to keep in the back of your mind. Let's take a look at the options chain for Disney so we can price this out. Let's take a look at this here. So we do have some support right there, but mostly chopping between this. Like I said, I don't love that. Options chain, Disney. So he was looking at some calls, I believe July 17th. So July 17th. That's 57 days away. And I think he said 150 strike price, right? So 150 strike price, 33 cents a pop if he could have gotten in for them. I don't know what price he got in at, but if he did get in for 33 cents, the ask is already at 40, but the bid is at 37. So he could, and there's a lot of decent open interest with this contract, and there's decent volume today. Although the contracts were down on the day 11 cents, but that's no big deal. This is a longer term contract. I mean, this looks like it could be a winner. Although I don't love the fact that it's too high up off the contract lows, but the high of this contract was $13.45. Jeez Louise, could you imagine buying in at 33 cents and then selling it for $13? That's the whole idea of options, by the way. The idea is not, and I keep, harping on this and harping on this. The idea is not to bet, $4, $5, $6, $7, $800. And I'm sorry. The idea is not to bet, $5, $6, $7,000 and come back with $2, $3, $4, $500. The idea is to, your risk reward should be, put out $200-300 and make, $3, 4, 5, $6,000. That's the way options are supposed to be played, right? And I mean, we day trade options here and we swing some too, but I started to move away from day trading options and really swinging them, which is what they're designed to do. And that's how you get these phenomenal gains. I mean, you could never get these gains in equities trading. I mean, it take you years to get, and if you got lucky, you could get like 500-600% in one day, and that's like really, really lucky. With options, I mean, you can get 500,000% like it's nothing, on your money. So, but you got to know what you're doing, because it's not. Having said that, you can get those gains, but it's not necessarily. That doesn't mean it's easy. Okay. I do like the delta and the theta on. Well, hold on. Let me see. I mean, it's not bad. I don't like deltas that are lower than 30 though, because it takes too much movement for you to make any money. The theta's low, so that's nice. But like I said, we've come a long way since the contract lows. But we're a long way from the highs too. And 5 cent delta is not sexy at all. I mean, the stock would, the implied volatility would have to skyrocket. I mean, we'd have to. I mean, that's. I mean, I don't know. I mean, and then when you're holding contracts that expire, you know, uh, that far away from here, anything can happen. I mean, in order for you to win, though, like seriously win with this contract, you'd need Disney to spike, like spike. And, I don't know how many contracts. He said he was going to get 5 contracts. That's nothing. I mean, for 33 cent, why not? So that's like what, $130, $140 to make potentially. Yeah, I mean, if this hits, you can make like $1,000 or more. But yeah, that's the power of options, and it's not too far out the money. But the problem is just this delta here. I mean, but if we get a big swing in implied volatility, you'll be in the building. And if we get, a huge swing in the stock price, you'll also be in the building. I would have preferred to buy maybe the 130 or the 135 because the deltas. I mean, I don't love 25 delta. I need a delta to be at least 30 to be acceptable, especially if it's like a swing. Anything under 30 for me, and this is my. I'm not saying anybody else has to do it, but just for me, deltas underneath 30, I don't really bother with, unless it's like a super gamble. Like, I don't care. Like, I'm buying like out of the money stuff that if something catastrophic happens or something, really great happens, we make, $5,000-$10,000 from a $300 bet. So, you got people who actually take a large amount of money and just go up and down the options chain, buying out of the money options, calls and puts, and eventually something's going to hit. And the idea behind it is that they lose, 150 here, 200 there, 300 there. But when those plays hit, they make $5,000, $6,000, $7,000, $8,000. So it covers the losses of the 1, 2, 300 here. You know what I mean? And then they still have a gain. So there's people that use that type of strategy. I don't recommend it, especially for new people. That's like people who like seriously know what they're doing. But theoretically, you could do that. I mean, I've seen people spend, and I've actually done it. I've been able to turn $300 into $5,000 on out of the money options. I've seen it happen, and I've had it happen to me. But as a sustainable strategy, that's not the way. Those are like Hail Mary touchdown passes, to be honest. It's not something that you should focus on trying to do. But to each his own. But yeah, that's my thoughts on that question. So that is all the time we have for today. Remember, plan your trades and trade your plan. Bulls make money, bears make money, but pigs get slaughtered. Don't forget to hit the like button and subscribe, and hit the bell so you never miss any episodes. Follow us on Instagram and join our Discord chat where we're live until 5 and we do something before 2 something. The links are in the description below. Until next time. Today, it looks as if our heroes were able to defeat the market gods. But the market did close down, and it looks as if we bounced off of a critical support level. But will the bears be able to maintain this momentum, or will they get ran over by the bulls? And our heroes swung a critical play. Will they be able to close the week up positively, or will they get clapped? Find out on the next episode of Trading BULLS Z.